Hey everyone, this is Jay Soloff from Investors Alley, and this is our options trade of the week. And just a reminder that this is a trade for educational purposes only. I'm showing some analysis and some execution, but it's not an actual trade recommendation. It is just for education. I do actual recommendations in my Option Floor Trader Pro newsletter. So that being said, we are here at marketchameleon.com looking at the unusual options activity, which is a great place to see where the action is. I particularly like to sort it by volume to see what some of the biggest basically some of the biggest option trades are occurring in, typically the stuff that ends up near the top of this list. Usually, the stuff that's in the news is going to be near the top. For instance, GE and Boeing today. You'll get some of the ETFs that are popular in here, like ARC recently. But we're gonna actually stick with this top one, GE, which has traded over 1 million options contracts, which sounds like a lot, and it is. And even though GE is relatively active in the options circuit, it still trades. This is almost 4 times more than the average volume here, which is closer to 300,000. A lot of the activity here are calls, which tends to be bullish, 63% to 37%, even though the stock was down 9%. So what happened is that the company announced they're selling off their jet leasing business for $30 billion. Investors thought that they would also raise guidance after the sale, which they did not. And so there was some disappointment and the stock dropped. However, call buying possibly suggests that people think it may rebound after all. So maybe it'll just take some time. But we can take a closer look at that here by looking at some of the actual trades. And there's quite a bit of, it's a little hard to tell because of the open interest on some of these. These may be closing trades after a drop. People could be taking profits on some puts or closing out some put hedges or something like that. So, I like to find stuff that looks like an opening trade, and that's when the quantity is bigger than the open interest, like this one here, in April 9th, 11 put. Only 76 open interest and an 8,000 block. So this is certainly an opening trade. At 12.29 was the stock price. The 11 puts were most likely sold for 21 cents. So, this could be something like a cash secured put where someone, had at least $168,000 in their account, which is what, $168,000 is what they got in premium. They would need to have the cash to be able to purchase 800,000 shares, right? So that's a lot of cash necessary in order to collect 168,000. But if you're an institutional account, maybe this is a way of getting into the trade by setting your entry point at around 11. If not, then you collect this 168,000 and you do it again. It could simply be just a trade to try to collect this 168,000 in premium. So just do some quick math on that. It's a couple percent. Looks like 21 cents. And that's equal to about 1.7%. So this could simply be just a sort of a month-long yield trade to try to get around 2%. But regardless, it's more on the bullish side. It's not bearish. It's at the very least it's neutral, right? Suggesting the stock isn't going to drop below 11, which is not that far off of where it is here at the close of about 12. So interesting to see, but again, potentially a way to increase yield. I mean, you can see the dividend is really small. It's only about 0.3%. So this in a month gets almost 2%. So you could see why that may be possible. Again, if you have the money, if you're willing to convert this into 800,000 shares, and obviously that requires a lot of capital, but this could be a way of getting in at 11 at a cheaper price because you're also getting that 21 cents. So different ways to look at a potential put sale. So looking at that in terms of the execution here, you can see the drop. This is, with the news of the jet leasing business being sold and some disappointment from investors, but potentially expecting a rebound by selling the 11 puts around here. This is about where it was hanging out before the recent rally. So if we go to trade here, April 9th, that's about 30 days. You can see puts were sold for about 21 cents. You can see all the activity here, almost 10,000, simply selling a put. Now, you wouldn't be able to do this in your account without a margin account or a cash secured put like I was talking about, where you actually have the money to buy at least 100 shares and sell one lot, and you'd have to have the money to buy 100 shares at 11, so $1,100. So multiply that by 800,000. That's how much money you would need for that big trade. But again, that's, if it's an institutional, then it's probably more of a margin trade. But who knows? It's impossible to tell from just looking at the trade itself. But an interesting strategy, similar to doing a covered call, a cash secured put, sort of the same premise. Anyways, if you're interested in the more of a directional trading with calls and put purchases rather than sales, then you can look at Option Floor Trader Pro, which there's a link on this page. And other than that, I will be back next week.